Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin with the Philippines' successful return to the international bond market, where the government raised $2.5 billion from the issuance of triple tranche dollar-denominated bonds, which received investment-grade ratings from Fitch, S&P Global, and Moody's. The 5.5-year tranche was priced at 4.375%, the 10-year tranche at 4.75%, and the 25-year sustainability tranche at 5.175%. Finance Secretary Ralph Recto says that since the global bond sale was well received by investors, the country was able to secure the best pricing for the multi-tranche transaction compared to its regional peers. The proceeds from this issuance will fund the government's budget and projects aligned with the country's sustainable finance framework. Meanwhile, the Philippines secures the continued commitment of the Asian Development Bank to boost the country's climate action initiatives. ADB's president, Masasugu Asakawa, says that the multilateral lender is finalizing $500 million in financing for the Philippines, which will come from its Climate Change Action Program. This is part of the ADB's $10 billion financing commitment to the Philippines from 2024 through to 2029. With this program, they seek to improve the climate resilience of local communities, ecosystems, and the national economy. The ADB is the country's top multilateral partner and the second largest source of official development assistance. Over in the United States, fresh economic data underscores the resilience of the world's largest economy despite elevated interest rates. Second quarter gross domestic product, or GDP, expanded by 3%. This is better than expectations of a 2.8% growth driven by robust consumer spending. Meanwhile, initial claims for state unemployment benefits came in at 231,000 for the week ending August 24th. This is marginally lower than economists' forecasts of 232,000 claims. While the figures have retreated from the 11-month high in late July, they do remain at levels consistent with a cooling market. The slowdown in the labor market has caught the attention of the Federal Reserve's officials, with Fed Chairman Jerome Powell signaling interest rate cuts are imminent amid concerns over the job market. Still in the United States, artificial intelligence firm OpenAI is gearing up for a big round of funding, and both Apple and chip giant Nvidia are in talks to come in as investors. Several media publications report that the latest round of funding could value ChatGPT, the ChatGPT maker, at above $100 billion, exceeding its previous valuation of over $80 billion. Venture capital firm Thrive Capital is reportedly investing around $1 billion in OpenAI to lead the funding round. This comes as OpenAI has become increasingly important to Apple's AI strategy, as the iPhone maker brings the chatbot ChatGPT to Apple devices later this year. Elsewhere in the world, Vietnam's data center industry gets a boost from Google as the U.S. tech giant explores building a large hyperscale facility in that country. Google's planned foray into Vietnam will be the first investment by a big U.S. tech company in the Southeast Asian nation's data center industry. Google is reportedly weighing setting up the data center close to Ho Chi Minh City, Vietnam's southern economic hub. This is expected to go live in 2027. In July, Vietnam relaxed foreign ownership rules for data centers, opening the window for more investments in this sector. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Over in Wall Street, robust economic data sent the Dow Jones Industrial Average to a record high. The Dow Jones finished up by 0.6% to 4134. The S&P 500 finished flat, while the tech-heavy Nasdaq shed 0.2%. The shares of artificial intelligence chip giant Nvidia continued to lose ground, dropping 6% after issuing an outlook that failed to impress investors. Fresh economic data shows that the world's largest economy remains resilient despite high interest rates and weakness in the job market, while second quarter GDP was revised higher.
ultimately we had some good jobs numbers today. So I think that's reinforcing again this kind of soft landing narrative. And I think that's the key to keep an eye on for investors in the coming weeks and months, is really around the U.S. consumer and the jobs numbers. Because to the extent that that remains strong, the economy remains chugging along, you know, the risk on stocks, the risk on trade, so to speak, is going to benefit.
Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at those initial figures. Right now at 9:37 this morning, shares at PSE are flat, up in the green by less than 0.1%. We're at 68.93. Broader all shares index flat as well, up by just 0.1% to 37.36. Now, as for the sub-indices, we're seeing a mixed picture here. The financials, holding firms, and property counters are marginally higher, while the industrial services and mining oil counters are slightly in the red. Now, to help us make sense of these numbers, we're joined by Cristina Ulang. She's the head of research at First Metro Investment. She joins us live via Zoom. Hi, Cristina.
Hi, good morning, Maiki. Happy to be here.
Okay, Cristina, we are at 68.93. We've fallen to the 6,800 level. We've been having a hard time breaking past 7,000 and staying above it. What does this tell you about current market sentiment?
Looks like the 7,000 makes investors tempted to do profit taking, and there's a lot of profit taking. And I think the foreign buying has to come in a bigger way so that we're able to breach the 7,000 level. Apparently, it's a formidable barrier in that we need to do more buying, but we also need a healthy correction, and we're seeing it now.
Okay, a healthy correction. To what levels, Cristina?
Maybe 6,800 to 6,750.
Okay, now the foreign buying, the sustained foreign buying that we need, what's it going to take to get that back into the market sustainably so that we break above 7,000 and more importantly, stay above it?
I think the relative valuation is one big factor behind the foreign buying. We are at PE of 11 times PE, and Wall Street, as we know, is very much very pricey already, and that's very tempting for foreign investors to revisit other countries here in the Asia Pacific emerging markets, where we figure as one of the cheapest and showing very good prospects, like 6.5% to 7.5% in terms of GDP growth next year. So it's best to position now, and the thing that aside from valuation, there's also this factor of growth prospects and the currency stability that we are seeing now in the peso. We've seen peso stability coinciding always with strong performance of PSEi, and then rally, very supportive, the currency stability. I think we have to have continuation of that. And of course, not to be forgotten, corporate earnings on double-digit pace in the first half, like 12%, 13%. We have to have some uplift there, up to 13% this year, full year.
Now, talking about corporate earnings, they've been pretty resilient the second half. Looking ahead to Q3, what are your expectations for Q3 earnings, and what are the sectors or specific companies that you expect to outperform the market?
We think that companies that are geared inward, especially those driven by the economic growth, such as those in energy and power, and of course the banking industry, which is also a barometer of the economy, would do well. And of course, there are some stories in the M&A side, and we think those will be very attractive also. And a little bit on consumption, because we know consumption has been hit by high inflation, but there are very resilient segments, especially automotive. It's still growing, 11% growth in the first half.
Now, you mentioned inflation. Investors are also looking ahead to the latest inflation data, which is set to be released in the first week of August. Do you think, after 4.4% July inflation, do you think that's going to be coming down, given that we may see the impact of the rice tariff cuts?
Definitely, it should be like correcting to 3.94%. Somewhere still within the higher band of the 2 to 4% target range of the BSP, and eventually much lower, 2.93% in the fourth quarter.
Now, the BSP is going to be meeting mid-August. The Monetary Board is going to be meeting to discuss interest rates after the 25 basis point rate cut in the previous meeting. If the latest inflation figures exceed expectations, come in at the high end, do you think that they'll be prudent and keep rates steady, and do they even have the latitude to do so?
I think the central bank has already signaled that they are very confident that the cut in the rice import tariff is going to be a big game changer, and that actually triggered the rate reset, the rate cutting cycle. We're on our way to the next level of a rate cut. I don't think there's anything that's going to be like uh, barring the continuity of this rate cutting cycle, unless we see the Middle East crisis push oil prices to like $100 per barrel, and that I think is not going to be happening in the near term. We have all these easing of inflation scenario being the major consensus view in the market, because we've had some base effects. They were already very high previously, and rice prices are going to be coming down. We have the harvest season happening November, and we have all of these OFW remittances coming in, and it's going to be shoring up the currency. So all of these factors are going to be, and of course the weather is going to be less hot and it's the cold season, December, and it's going to be like reducing electricity rates. So all of these factors are going to help ease inflation, which is going to reinforce the rate cutting cycle.
Specifically, what is your forecast for August inflation? You mentioned earlier that your expectations were in line with the government's between 2 to 4% for August. What specifically is your forecast for the August print?
We were like at 4.1%, like for the August, 4.1, no, 3.9 to 4.1, around that level.
Okay. At this range, how do you think the BSP is going to move on interest rates? How much of a rate cut are you anticipating with inflation coming down?
Another one, 25 basis point in October, and another one by December, 25. Total of 75 basis point for the entire year.
Okay, all right. And where do you think that's going to take the PSE? All those rate cuts coming into the picture.
Early in the year, we were the first one. FMIC was the first one to predict like 7,000 for this year, and 7,000 has been touched but not breached twice this year. Third time intraday, and we think it's going to be like moving higher to 7,002, 7,003. Our very bull case is 7,500 by, if not by year end, maybe beginning of early next year.
Well, nice that that's on the horizon, Cristina. Another thing I wanted to talk to you about was the global bond float. The Philippines has successfully returned to the international bond market for the second time this year, raising $2.5 billion US dollars. What does this tell you, and why is this important?
Of course, we are running our budget deficit, and we have our government borrowing program, like 2.3 trillion this year. We need also to boost our gross international reserves of the central bank in support of the currency, and all of this money is really going to finance the operating requirements of the government, the cash operations requirement, the debt servicing, the principal payments, interest payments on our debt, and of course, running the government and funding the infrastructure that we all need to put in place. And I think the pricing reflects the confidence of international investors on the BBB plus rating of the country, our ability to pay, our growth prospects, and our fiscal consolidation program very much in place, bringing the budget deficit down to 3% of GDP by 2028. I think that's very attractive proposition, gives a lot of credibility to the economic managers and the country's ability to weather the ups and downs of the global economic cycle, the business cycle.
All right, yeah, great news there. Now, on the corporate front, Meralco has some good news. S&P Global Ratings upgraded Meralco's credit rating from BBB up from BBB minus. What does this rating signify, and how do you see it affecting investor sentiment for this particular utility firm?
It's a big wow for Meralco and a big come on for foreign investors. Those foreign investors who are coming in should be looking at Meralco. Even local funds should be looking at Meralco. Great dividend paying ability, like 5%, 6%, and very much GDP growth driven. As bonds go down, the yield on bonds are going to go down. Investors should be like putting their money in high dividend paying companies like Meralco. Very much GDP growth driven and very much inward looking, going into renewable energy, and owns and will going to be in the renewable energy through Terra Solar, and they're going to be having a JV, a foreign partner in the Terra Solar, which we know is going to be the biggest solar, will operate the biggest solar farm in Asia. I think 4,000 megawatt. I think Meralco is a gem that everybody ought to have. Very good financials as proven by the recent credit rating upgrade, and great dividend paying. Actually, the net income has been guided at 43 billion pesos for this year. And if you're going to look at the PE is just in line with the PSEi level. So it's still very reasonably valued.
Okay, very bullish on Meralco there. At what price should investors come into this stock, Cristina?
Actually, it has risen like close to 450, 430. And in hindsight, it would be nice to remember. Had you entered at the 380 or 375 level, then you would have made like a windfall. So wait to buy.
All right. Okay, Cristina, before we let you go, best piece of investment advice anyone has ever given you, and another piece of investment advice that you can share with other people, assuming that's different.
Number one, don't be lazy, do your homework. That is the biggest lesson that I have learned from my bosses here in FMIC. They're very tough on the details and very tough on the scrutiny of the companies. So don't be lazy, do your homework. And the second big lesson is that maybe you must defy human nature, because human nature always have this tendency to join the rally, chase the rally, and when there is bloodbath in the streets, and to shirk away from it. But that's exactly what that's the wisdom of Warren Buffett. And right now he has like a cash pile of 269 billion, seeing that Wall Street is also already very pricey, and there's going to be this capital gain tax. So ahead of all of these things, he has already sold and gone to Japan to invest.
All right. Thank you, Cristina. So don't join the bandwagon over there. Go the other way. Thank you for your insights on the market with us. That was Cristina Ulang, the head of research for First Metro Investments.
Thanks, Maiki, and good luck. Bye.
Now we're taking a quick breather. Basis Points will be right back. Welcome back. 4 of the country's biggest conglomerates are once again vying for Meralco's 400 megawatt power supply contract. Joining the pre-bid conference for the competitive selection process are companies under Aboitiz Power, First Gen Corporation, the Philinvest Group, and San Miguel Corporation. Meralco set the deadline for the submission and opening of bids for the 1st of October. Early this week, power companies belonging to the San Miguel and Aboitiz groups emerged as the front-runners for Meralco's 600 megawatt supply contract. Let's check on the business headlines in major news websites. On the Philippine Star, the Bangko Sentral ng Pilipinas terminates its contract with a firm, Allcard Inc., the supplier of the national ID cards, as this firm failed to deliver on its commitments. Allcard is the same supplier involved in the driver's license card issue last year. On Business World, the Philippine Central Bank says that the number of digital banks may not hit the maximum limit of 10 players, as applicants must adhere to tighter standards for financial inclusion. And Bilyonaryo economic czar Frederick Go says that the Philippines has the potential to be one of Asia's shopping capitals. But first, he says the government must put in place an electronic visa program and a tax refund system to get more foreigners to shop in the country. Over in the U.S., a district judge there dismisses a federal lawsuit accusing Elon Musk and his electric vehicle company Tesla of defrauding investors by inflating the value of cryptocurrency Dogecoin and by engaging in insider trading. The lawsuit alleges that Musk used his Twitter posts, a 2021 appearance on NBC's Saturday Night Live, and other publicity stunts to manipulate Dogecoin's value and profit from trades. Investors claim that Musk drove up Dogecoin's price by more than 36,000% over 2 years, only to let it plummet, causing them billions of dollars in losses. Musk allegedly timed his trades around his public statements and activities related to the cryptocurrency. And that's it for Basis Points. I'm Maiki Oreta. Have a good weekend and see you on Monday for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.